Yeah.
Present. All right, then no problem. It may convert at any time. We don't.
Yeah, you convert.
So, and these are the called as golden rules of accounts. What?
Golden rules.
Golden rules
For accounting.
of
Okay.
accounts
Okay.
are
Hmm.
principles
Hmm.
of
Hmm.
accounts.
Okay.
Based on this,
Okay.
okay,
Yeah.
principles of accounts,
Yeah.
people will call it as,
Hmm.
or simply you can call debit and credit
Okay.
rules.
Hmm.
Debit and credit rules
Okay.
of traditional approach.
Okay.
Which approach?
Traditional.
Yeah. Traditional approach. In traditional approach, golden rules of accounts people will call. In interview, many a times these things will be tested.
Okay.
Most of the times these things will be tested in the interviews.
What interview?
Even in if you go for any interview of accounts related,
Yeah.
they will ask these things.
Okay.
Accounts related.
Okay.
Okay. They have classified these things into, one is real account. Real account. All assets comes under real account.
Okay.
Now you know what is asset, no?
Yeah.
So all assets comes under real account. Okay. And rule for these are, real account says debit what comes, debit what comes, and debit what comes in.
Debit what comes in.
Here comes in means into the business whatever is coming you debit.
Yeah. Okay.
Suppose cash is coming, you debit the cash.
Okay.
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 Cash is a asset, no?
Yeah. Cash is.
Cash is a asset, and whatever amount you are getting, that is debited.
Okay.
Fixed asset, plant or furniture you have purchased. When you purchase, it will come into the business, so you need to debit.
Okay.
Similarly, credit what goes out.
Okay.
Debit what comes in and credit what goes out. Real account, all, okay, all assets comes under real account nature.
Okay.
For example, you can write the example. Cash.
Yeah.
Furniture. Plant and machinery, etc. Okay. Next, we are having one more thing. Personal account. Okay.
Yeah.
Personal account.
Okay.
The persons
Yeah.
who are dealing with the business entity are considered as personal accounts. And we are having types. Personal accounts में types है. Okay. This personal account can be natural person, natural
Natural person.
person,
Okay.
natural person like Ram, Sita.
Yeah.
Okay, Ram, Sita are the persons who are they may be your debtor or creditor who
Okay.
are dealing with you,
Huh.
whether customer or supplier. Okay, Ram, Sita, okay, or any X, Y,
Huh.
okay, some name, personal name,
Okay.
okay,
Okay.
comes under this. If you give something to Ram, Rama is the person who is receiving and he will be debited. And the person
Huh.
who is giving will be credited.
Okay.
And artificial persons, artificial person, these are not natural persons, these are artificial persons.
Okay.
Names of
Yeah.
other business units,
Huh.
like example,
Hmm.
Ram and Co, Krishna and brothers.
Huh.
These are the entity names.
Huh.
Okay, SBI Bank.
Okay.
These are names of the other business entities which are artificial persons.
Okay.
Are Tata Motors
Yeah.
Limited
Okay.
company.
Okay.
Like this, artificial persons will be.
Okay.
And some are representative personal accounts. Representative personal account.
Okay.
These are personal directly, but these represent the others. Like case of business, drawings will be there.
Hmm.
Means owner, whatever amount withdrawn by owner, that will be called as drawings. Okay,
Okay.
these are represents the some other person.
Okay.
Okay, some other expenditure, some other personal.
Hmm.
Okay, some other account these represents.
Hmm.
Drawings are capital.
Hmm.
It is representing owner's fund,
Hmm.
right? So capital, drawings, and outstanding expenses means you need to pay these things later.
Hmm.
It is not expenditure. It is representing some liability.
Hmm.
Okay. So expenses which we need to pay later on, those are called as outstanding expenses.
Hmm.
Sometimes prepaid expenses,
Huh.
incomes received in advance, incomes
Hmm.
received in advance,
Hmm.
or income not yet received, receivable. RES बोलते हैं या incomes receivable, incomes receivable.
Some receivable or arrears.
Or arrears means they will be received in future. Income को arrears बोलना, expenditure के लिए outstanding.
Yeah, I understand.
Arrears
Hmm.
of income. These are representing some other account. So these are considered as what? Representative personal account. Natural persons and artificial personal and representative personal. Like this, personal account has been classified.
Okay.
And rules. Okay, here are the rules now for debit and credit. Here, rule for personal account will be debit the receiver, debit the receiver who is getting benefit, person who is getting the benefit, person who is getting benefit from business. Suppose you are selling to someone else on credit. That is the benefit you are given to them. Debit the receiver. Debit the receiver
Yeah.
and credit the giver.
Yeah.
Credit the giver.
Okay.
Okay.
Hmm.
Person
Hmm.
who is
Hmm.
giving benefit
Hmm. Hmm.
to business.
Hmm.
He is giving some benefit to the business.
Hmm.
Is called as
Hmm.
creditor and his account will be credited.
Okay.
Okay. So debit the receiver, credit the giver.
Yeah.
These are the rules
Hmm.
for the representative personal account or personal account or artificial person or natural person.
Hmm.
Natural person.
Hmm.
And one more is there. We are having one more thing called nominal account. These are just for the sake of current period. These will exist. After that, there won't be any of these expenditure in the books of they are for just nominal purpose. After that, they will be transferred to some other account.
Okay.
Okay, their existing will become dismissed.
Hmm.
Okay, dissolve into other.
Okay.
So nominal accounts.
Hmm.
Okay, these includes incomes
Hmm.
and expenses, gains and losses of business organization. This includes incomes, expenses, gains and losses of business organization. These are recorded in a particular period of accounting books. These are recorded for a particular period of accounting books and later transferred to trading and profit and loss account. Where it will be transferred? Trading account,
Profit and loss.
trading account and profit and loss account. You will transfer these things at the end of the period.
Okay.
At
End of the period.
end of the period. Till it is transferred, nominally they will record in some name. Okay, as income or expenditure, as gain or loss. So rules, okay, relating to nominal account. Debit all expenses and losses. Whatever expenses and losses are there, they will be debited. What it says? Debit all expenses and losses and credit all incomes and gains. Credit all incomes and gains. Incomes and gains will be credited and these will be debited. Here, interesting thing, trading account, in trading account, direct incomes and expenses will be transferred. What will be transferred? To the trading account, direct incomes and expenses will be transferred. And indirect incomes and expenses will be transferred to P&L account. Direct will be transferred to which account?
Sorry?
Trading account.
Trading account.
Trading account, you will transfer direct incomes and expenses. And to the profit and loss account, you will transfer indirect expenses and incomes.
Okay.
At the end of the period, we will transfer, we are saying now.
Yeah.
For the namesake, they are recorded first. Later on, at the end of the accounting period, they will be transferred. So when you are transferring, all direct incomes and expenses will be transferred to trading account, and indirect incomes and expenses will be transferred to P&L account.
Okay.
Okay.
Yeah.
Rule is what? For nominal, debit all expenses and losses, credit all incomes and gains. Credit all incomes and gains, debit all expenses and losses. Incomes and gains को डेबिट करना, सॉरी, इनकम्स एंड गेन्स को क्रेडिट करना, डेबिट करना कौन सा? एक्सपेंसेस एंड लॉसेस. ओके, ఏం డెబిట్ చేయాలి?
Incomes and losses.
Expenses డెబిట్ చేయాలి.
Expenses.
డెబిట్ ఆల్ ఎక్స్పెన్సెస్ అండ్ లాసెస్. ఏం డెబిట్ చేయాలి? ఎక్స్పెన్సెస్ లాసెస్ డెబిట్ చేయాలి. క్రెడిట్ ఏం చేయాలి? ఇన్కమ్స్ అండ్ గెయిన్స్ క్రెడిట్ చేయాలి.
Okay.
అండ్ రియల్ అకౌంట్, debit what comes in, debit what comes in, credit what goes out.
Okay.
Okay, real account, what it says, debit what comes in and credit what goes out.
Yeah.
Aim debit cheyali, whatever is coming into the business, if it is asset nature, then you debit. If it is asset nature and going out, you credit.
Okay.
Suppose you are paying money, cash will be credited. Suppose you are receiving money, then you will debit.
Debit.
Next to personal account. Personal account, debit the receiver, credit the giver. Simple. Receiver name cheyali, debit cheyali, giver name cheyali, credit cheyali. The person who is giving benefit will be credited. The person who is receiving benefit from the business will be debited. Clear all these things?
Yeah.
But same thing.
I'll just call you back. Sorry, I'll just mute one minute.
You can stop recording now then. Pause में रखो. But under accounting equation method, our new modern technique, what says credit, capital, liabilities, profit, incomes, debit, assets and expenses.
Okay.
Based on these terms, credit and debit will be done. Okay. And for this purpose, they say like this.
Okay.
Under modern technique, modern approach. Okay. Modern approach or technique, debit and credit rules will be like this.
Okay.
Asset increases. Asset increases debit. Asset decreases credit.
Okay.
Capital or liability. Capital or liability increases credit. Capital or liability decreases debit. This is the new technique.
What new technique in the sense?
And
What?
modern approach it is.
Modern approach.
They will do not as real account, personal account, or nominal account. They'll see it as asset or liability or capital. If asset is coming, it will increase na balance.
Yeah.
So if asset increases, you debit. If asset decreases, you credit.
Okay, understood.
Okay. If liability increases, you credit, or capital increases, you credit.
Okay.
Okay. And profit is form part of capital. Okay. That means if you get profit, you credit. If you get loss, you debit.
Okay.
And for income, okay, for incomes increases.
Yeah.
Are you able to see?
Yeah. A little more light if you can provide actually.
Is it okay now?
Yeah, it looks good. Yeah.
Now it is okay, na?
Yeah.
So income increases, credit. Income decreases, debit. Expenses increases, debit. Expenses decreases, credit.
Okay.
And profit will form part of your capital.
Okay.
So if you get profit, that means profit you are getting means increasing, then it will be credited. Profit decreases means loss. Loss or profit decreases. Profit decreases, it will be debited because it is form part of capital. Because of loss, capital will get decreased. Okay. Because of loss, capital will get decreased, and you need to debit it. These are the things. Just remember. This is modern technique, and this is traditional approach for debit and credit rules.
Okay.
Sometimes there will be a direct question relating to it.
Okay.
Explain the debit credit rules under traditional approach and modern approach. Okay, we will wound up for today.
Okay. Yeah. So 5:30. Yes.
If you have any doubt, you can ask.
No doubts as of now. I will once you send the notes, then I'll ask you some doubts tomorrow actually.
Okay, I'll send the notes. No problem for that.
Okay, thank you, Tulsi.
Right.
So
Acha, you can stop the recording.
Yeah. So tomorrow